Hello, welcome once again. This is Siwing Yi from the Year Listen Network. I'm going to go over a topic that just dated on November 29th, 2 days ago, 2022, by CoreLogic, S&P Case Shiller Index Growth Rate, approaching single digits, up 10.6% in September. So here we go. CoreLogic, very reputable company. Home prices are down by 3% from June's peak, with double-digit declines in San Francisco and Seattle. However, I'm going to give you my perspective based on my 30 years of real estate investing experience and taking my real estate investors all over the country to buy in the prudent markets, cash flow markets, affordable markets, so investors, mom and pop investors, can achieve their goals of buy and hold long-term strategies. So with that in mind, I'm going to have a lot of opinions about this type of information because I have boots on the ground and years of experience to look at different markets in the country, where to buy, where to profit the most. Okay, with that in mind, CoreLogic Case-Shiller Index saying that home prices appreciation continue to slow at a rapid pace. This article goes all the way up to September only. Of course, is as always the case, is a lagging indicator. It'll be another month, at least a month and a half before CoreLogic will update the next index growth rate, probably December or January. It's a lagging indicator. So we can only go up to September, which is the third quarter of 2022. So per the third quarter of 2022, September, CoreLogic stated that there are 6 straight months of decelerating annual home price appreciation. Decelerating, in case you don't know, is prices are still increasing, but increasing a lot less than previous months or previous year trend. Okay, so it does not mean decelerating. Decelerating does not mean the prices are dropping. So I want you to have a clear distinction what some of these words mean. So every article I evaluate, I take a deep dive, I look at the in-depth analysis because I do not go by the headlines. Most headlines are as provided by these organizations are oftentimes a clickbait, and they exaggerate the headline to achieve readership, higher clicks, whatever. But I always take a deep dive to ensure the content of the article is legitimate, it is relevant, and it's truthful. It is not, hopefully, it's not misleading. Again, based on my years and years of real estate investing experience in different markets in the U.S. country, in the U.S. Personally, I have properties in many states in the country, and many of our investors, hundreds and hundreds of them, have purchased cash flow properties in many markets throughout the past 20 years under our guidance and consulting. Mom and pop investors out there, you know who you are. Okay, so anyway, so the article goes on to say that CoreLogic's home price index at this pace, according to it, annual growth is expected to slow to 8% by December, which is right now, this month, and 0% by the spring of 2023. So the second quarter 2023, we may continue to see continual deceleration of home prices nationwide. Now, it's just nationwide, but real estate markets are local. I want to separate the large housing markets versus the smaller housing markets in different parts of the country. I want to break it down so you know all houses are not equal, all markets are not equal. Real estate housing is very localized. There's no such thing as a one national real estate market. Agree? Does it make sense? If you do not agree with me, please make a comment and we can do some debating. All right. So some markets, let's continue. Some markets will see more notable price slowing and potential declines in 2023, though decreases are expected to remain regional. Just like I just said, some markets will have a potential decline, some markets will not, because but the word regional on this article tells me some markets in the US are not seeing price declines. So you have to, I read into each article, I do a deep dive on each sentence, on each word, so I could make an interpretation to determine whether this information are legitimate, whether these articles are accurate or misleading or whatever. Okay, so I can only say what I feel, and my opinions matters, I think, because I've been doing this investing longer than most people out there in a YouTube channel at the very least. And so let's go through again. Decreases are expected to remain regional and specific to metro areas that saw relatively more price growth during the pandemic, such as the same old players, Las Vegas, Phoenix, Austin, California for the most part, and few other areas that have experienced, I mean, historical price growth during the pandemic. What goes up, and Boise, Idaho also. What goes up must come down. These markets in the past 2.5 years, these trophy pandemic markets have achieved like quadruple digit appreciation during the pandemic. So now this market is going through a price correction, 7 to 10% decrease so far year to date. But I covered that on my other videos. Whereas in the other markets, like in South and Southeast of the US and the Midwest, are very regional. They have not experienced the up and down of price appreciation and price deceleration as in this pandemic boomtown market, as I mentioned earlier. Boise, Phoenix, Las Vegas, Austin, just to name a few, that are going through some pretty steep price correction as we speak. Does that make sense? So based on the CoreLogic September home price index, San Francisco, by the way, I live in Bay Area for the past more than 30 years, so I know the cyclical nature of California real estate market. I have no fear because it is what it is. You know, all these kind of things are in my mind are temporary. This housing correction, however you call it, bubble, but not a crash, it's going to be temporary. So if you have a long-term buy and hold strategy, whether you are a primary home buyer or whether you are a real estate investor, all you have to do is buy in the right market where the numbers make sense for you, invest for the long term for investors, for primary home buyers. When you buy a house to live, you need to have a long-term perspective, okay? Because this price market adjustment will blow away soon enough. So don't have this tunnel vision. Just think big picture, think long term, and you'll be fine. Real estate over long term will always appreciate. That's history. You must understand history. Anyway, so San Francisco was the only metro area to post an annual drop in home prices so far, down by 1% year over year. Again, this is only September 2022. You know, CoreLogic still need to capture the remaining 3 months of 2022 to determine whether San Francisco is still the only metro that have a price drop of 1%. So based on September data 2022, CoreLogic index, housing index on this article, of all the markets, all the 400 metros in the US, only one market, San Francisco, has the home prices has dropped by 1% as of September 2022, third quarter 2022. Okay, so we remain to be seen when the next CoreLogic update becomes available sometime in January, and we'll see year over year, December 31st, what are the actual price drops. Does that make sense? All right. And CoreLogic have identified 10 to 20 city composite indexes to determine the how much of the deceleration of some of these big markets. So the figure one, September home price appreciation shrinking swiftly. CoreLogic, S&P Case-Shiller Index year over year change. Let's go over the past what, almost 10 years now. So we'll see the way they track it based on the annual appreciation. And from 2013 to 2014, we have seen a pretty large 13 to 15% appreciation, a 2-year time frame. Then the remaining 2014 kind of slide up and down around 5%, 5 to 6% appreciation from 2014 all the way to 2017, 6-7% appreciation, 2018, then 2019 back to 5%. Hey, at least every year over year for the past 10 years almost, nationwide price has appreciated. There's not one metro that have depreciated, that have lost value during this timeline. Does that make sense? Then when we reached the March of 2020, when the pandemic began, that's when the Federal Reserve reduced the interest rate to around 3%. And then at that time, the supply of inventory were around 1 month to supply of inventory. And therefore, you have this pandemic housing boom where there were multiple offers, bidding war for homes in many areas of the country, especially Boise, Phoenix, Las Vegas, and Austin, the top 4, and a few others. They have skyrocketing increases, 20, 30, 40, 50, 60, 70% appreciation from during the pandemic 2020 to all the way to throughout 2021 and into the first quarter of 2022. So those trophy pandemic boomtown markets, they went up massively. Now they're going through a largest downturn. I wouldn't say crash, but I would say correction of home deceleration so far around 7 to 10% as of today, November, December 2022. But I will provide you more data once this organization will come up with their forecast in the next few months. But this, again, this article goes up to only to September, which is 9 months for 2022. But the remaining 3 months from September to this December, we expect to see pretty significant changes in a mere 2.5, 3 months once the new data comes out in January by CoreLogic and other organizations such as Redfin, Realtor.com, a few other organizations that comes up with this real estate housing forecast. And I will share that with you on a weekly basis, what's going on in real time with the real estate market throughout the country. Does that make sense? Then, of course, the interest rate went up dramatically back in May of 2022, as you can see right here, around May of 2022, it went up from 3.5% mortgage rate to 6 and to 7% last month. So this double 100% increase in mortgage rate has caused totally change the housing marketplace. And then we'll see price drops from May all the way until right now. It's continuing. So still, based on CoreLogic data, we're still seeing year-over-year appreciation, albeit a lot less, right? September 22, the appreciation is still 10.6% nationwide. all right? But I suspect by December 31st, when the next data comes out, I will expect the appreciation from 2021 to 2022 nationwide, that is, will probably hover around 0%. I'm talking 0% appreciation. I'm talking not any appreciation for the past 12 months, at least big picture nationwide, even though certain neighborhood, certain segment of the country are a little bit different. Okay, does that make sense? Hopefully, I'm giving you some simple analysis so you can understand as a layman out there. So that's the core of my thoughts. Now let's go over now the big markets. Let's go over the boomtown pandemic market. Look, Miami, by the way, has posted the strongest annual home price growth among the 20 track market, and I'll tell you which market are these momentarily. So what they are saying is Miami has posted the largest appreciation without any decline, any reduction of prices. But I know, many markets as an investor, but my investors never go to Miami. Miami is a super expensive market. Not only now, even 10 years ago, even 5 years ago. It's just the number does not make sense for diverse investors go in there because prices are so high. Because you have tremendous amount of demand from international buyers, and is a good, well, according to a lot of people, is a good place. People with a whole bunch of money, they enter Miami. So you have investors, you have retirees, you have people with deep pockets from New York City and the Northeast come down to Miami and buy up all those homes. So Miami continues to be a very, very upscale market, and they have not experienced any downturn, home price reduction. They continue to surge at a double-digit level, as you can see right here. Same thing with Florida. As a matter of fact, Florida have more locations in the state of Florida that have tremendous price increases, not just in the past 2 years, but for the past 10 years. And most of our mom and pop investors have been investing in Florida, but not Miami. Central Florida, Southwest Florida, yes. So those prices are still doing well. Investors can still cash flow in these markets for the time being. Tampa, Florida, ranked second in terms of home price appreciation year over year. September 22 from 2022 from September 21. And Charlotte, another market, Charlotte, Raleigh area. Again, we have investors buying in this market throughout the years, including recently. They have also posted the third highest increase in appreciation, 17.8%. And year over year in September, Phoenix is rapidly slowing housing market, hold the metro down to the 7th position with 12.6% increase, down from the peak of 32% appreciation back in February. Okay, let me see what else. Las Vegas, same thing. As you can see, have gone through some deceleration. Phoenix, Las Vegas, as you can see right here, the deceleration year over year for these 20 metros. Look at the 20 metros: Miami, Tampa, Charlotte, Atlanta, Dallas, Las Vegas, Phoenix, Cleveland, New York, Chicago, San Diego, Denver, Boston, LA, Detroit, Portland, Washington, Minneapolis, Seattle, San Francisco. Some September 2022, from September, the blue is September 22, the red is August 2022. As you can see, if there's a big spread, that means there's a price deceleration. If the spread is not that large, that means the price is pretty steady. So Miami and Tampa and Charlotte, the prices are very steady. We have not seen too much of a correction in this market, as I mentioned briefly. But we see the big spread between the blue and the red in Las Vegas, in Phoenix, the big spread, right? And in San Francisco, look, San Francisco had the largest spread of price decreases year over year. Seattle, similarly, is high tech. High tech is going through some layoffs, as you may or may not notice recently. So we expect some price correction in a price tech high tech metro, Seattle, San Francisco, the Bay Area for that matter. And the other markets are more stable. Detroit is in the Midwest, are holding up very well, and Cleveland is holding up very well. So you see what I mean? The big metros have more of a price deceleration. The big metros, especially California and the western region, the Pacific Northwest, Seattle, and then some of these boom towns are going through some price correction because they went through some skyrocketing price gains during the pandemic. Okay, so let me see what else. I think that's pretty much what I have to say. Let me see what, as I conclude this. So some of these are smaller metros, like Tampa, Charlotte, Detroit, Portland, Minneapolis. They are low tier markets. The high tier markets are the huge metros like San Francisco, California, Seattle, New York City. So low tier markets could reflect continued pressure from multiple parties, including investors and owner-occupied buyers, as well as a stubbornly low inventory of homes for sale. So what this sentence said, low tier markets, there's more affordable markets like Tampa and other areas of Florida, Central Florida, Atlanta, the smaller metros that have low home prices. They're located in the Sun Belt. They are prime for buyers from many different segments of the buyers, including, deep pocket investors and mom and pop investors are targeting entry-level homes in this lower tier markets. That's what this sentence is telling me. Do you understand that? So the people are moving into affordable markets, not just primary home buyers, millennials, but investors from all over the country and all over the world are targeting on these affordable markets in the Sun Belt, mainly in Texas and Florida. Okay. So let me see. I think that's anything else I need to say. So prices are down by 3% year over year on September, as provided by CoreLogic on this article. So prices have been decreasing month over month in 2022. And who knows what's going to happen beyond this. So again, my takeaway is prices have increased so dramatically, but 2022, based on the sudden rise of interest rate, the year-over-year appreciation in all the markets in 2022 could come down to zero, even though the price gains were pretty dramatic at the early part of this year, 2022, in many markets. But remains to be seen what's going to happen in 2023 if the mortgage rate stay the same, 7%, or get lower by 6%. It all depends on a lot of things, right? We don't know. But one thing for sure, I said it many, many times, because so many homeowners, the majority of homeowners have mortgage rate of less than 4%. They have a massive amount of equity. So the homeowners, the sellers, the potential sellers are controlling the housing market. If they are staying put, if they're not selling, and they're not, then the housing market will be a standstill. You're not going to see a housing market crash. For you to see a housing crash, you have to see stressful sellers. The sellers, the homeowners right now, they're not stressed for the reason I just stated to you. there will be no housing crash of 20% or more. It's just not happening. Today's environment is a lot different than 2008 on the previous housing market crash. Completely 100% different. I'm not going to go over that, the reason why, because I discussed that on my other videos recently. So you can watch my other videos. So yes, we can do a correction. Some markets have a steeper price drop than other markets, but there are 400 markets in the US, and many of the markets in the Midwest and the South and Southeast are doing very well. They are stabilizing, they are still gaining in single-digit appreciation, but only the markets in the Western region, as I stated earlier, especially in California, have some steep price drop, 7-10% for the time being. Time will tell what's going to happen. 2023 will be a very interesting year. Will continue to provide you with weekly videos from various sources, so I can educate you guys, primary home buyers and real estate investors alike, so you can make an informed decision as to what to do, what not to do moving forward. Again, if you see a lot of value in this video, please smash the like button and also subscribe to my YouTube channel. And finally, you might want to put your email, register your email into our newsletter database on our website below, so you can become a free member of our real estate investing community, so you can receive weekly newsletters on real estate investment opportunities and education free by being part of our network of investors. Thank you so much. This is Siwin Yi. Have a nice day. I'll see you on the next video. Bye-bye.